Morning, guys. It's Tuesday, October 21st, 5:24 a.m. Central Time. Grain markets are mostly higher this morning. December corn futures up a quarter cent at 423 and a half. November soybeans up 4.5 cents at 1036 and a quarter. December Chicago wheat down 1 at 503 and 3/4. December Kansas City wheat down a half at 489 and a half. December spring wheat is up a quarter cent at 548 and 3/4. We've got some more news out of DC to start off this morning.
US Colombia tensions have intensified. On Sunday, President Trump announced that the U.S. would reduce aid to Colombia due to the nation failing to curb drug production. He also stated that he plans to impose tariffs on Colombia and warned that the U.S. may intervene if the nation fails to get drug production under control. Colombia has long been a key U.S. ally in Latin America and a top recipient of American assistance, receiving $230 million in the most recent fiscal year, a decline from more than $700 million in previous years. Additional aid cuts could jeopardize military cooperation and efforts to combat drug trafficking.
Trump is picking a fight again with another big ag trade partner. Colombia was the third largest importer of U.S. corn on the export market last year. They accounted for 11% of all U.S. corn shipments. I believe they took about 30 million bushels. So, you're talking 11% of the 18.5% that is the total share of exports, or was last year. Colombia accounted ballpark for 2% of all demand for U.S. corn last year, which doesn't sound super substantial, but it's something that could result in some reduced export sales in the future. Colombia, to this point, has not done any sort of countermeasure or retaliation. They haven't said anything about, hey, we're not going to buy corn or anything like that. The only thing that they've done is that they pulled their ambassador from Washington, D.C. this week in protest. I don't know if they're in a position to get involved in some sort of trade spat or if they want to do countermeasures, but that's the story today. And again, it kind of goes with this theme that we've seen recently where the administration has not really been cooperative with a lot of our big ag importers, China being the big one, but other stuff. We're going to get to the beef story and Argentina a little bit later here. There's just a lot going on that doesn't look good in the eyes of farmers and ranchers here in the United States.
U.S. soybean shipments to China came to a halt in September for the first time since 2018. During the same month last year, China imported 1.7 million metric tons of U.S. beans, according to China's General Administration of Customs. The complete stoppage reflects the ongoing impact of the U.S.-China trade war. Meanwhile, Brazilian soybean shipments to China last month jumped almost 30% year over year, while Argentine shipments surged nearly 92%. China's total soybean imports in September rose to 12.9 million metric tons, the second highest monthly total on record. Without a U.S.-China trade deal, China could face a potential supply shortfall early next year before Brazil's new crop is available.
This is no shock to anybody. We're still seeing export inspections reports, and we haven't shipped anything to China in a while. That being said, the soybean market has acted much better here the last 3 or 4 days. This zone, call it 1038 up to 1052 November futures, kind of the area between those two trend lines. If you guys are watching, that's going to be a big area of resistance. Scott Bessent is going to be in Malaysia this week, and he's going to discuss trade with Chinese negotiators. I don't know if anything will come of that, but I believe that's a part of the reason why the soybean market has been able to rally this week.
U.S. soybean shipments exceeded pre-report expectations last week. USDA reported that 54 million bushels of soybeans were inspected for export during the week ending October 16th. The print was up 45% compared to the prior week, but down 42% versus the same week last year. Corn shipments were reported at 42 million bushels. The print was up 8.9% compared to the previous week and up 32% versus the same week last year. Wheat shipments were near the upper end of expectations at 18 million bushels. The print was up 7.4% versus the previous week and up a whopping 78% compared to the same week last year.
So that soybean shipment number was up 45% on the week. But what you got to remember is that this is the time of year when we see a big spike in soybean shipments, and we're still not where we would typically be if China were involved. This current week of the marketing year seasonally is the worst since the 1920 marketing year, which was also associated with a U.S.-China trade war. The biggest importers of U.S. beans last week included Mexico, Bangladesh, Pakistan, and Germany. So we are doing business with some non-China destinations, but it's not enough business to make up for what China would typically buy.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Pete Meyer was on yesterday. We talked about a number of things, just general price action in row crops. We talked about the spread and basis situation. Pete has some strong opinions on these CME sports contracts, which I think Pete and I agree are both going to be kind of messy. We talked about yield prospects, some of the USDA stuff, always great stuff with Pete. On Friday last week, I did a mailbag video about why I quit the brokerage business, and I took questions from premium subscribers, all sorts of stuff about fees and how the brokerage business works. And Joe, why did you quit? There was a lot here. I thought it was cool. I loved answering the questions. It was interesting stuff. Subscribers always have great stuff. Ryan Moe is going to be on today. Ryan's in the commercial business, and we're going to talk in detail about what's going on with corn spreads, with some of the basis stuff, what it all means. It's very, very interesting, especially if you're in the commercial side of the business. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. We send out a premium video every single business day. It goes out at 10 a.m. Central Time via text and also via an email blast. I know you guys are busy. You can sign up on your phone. We do Apple Pay, Google Pay, Cash App, all that stuff, credit card. Everything that we send out is super easily accessible on your phone. Give that deal a shot this morning, guys. We'd love to send you our content.
Brazilian soybean planting is progressing at a rapid pace. According to well-followed private group Ag Rural, as of last Thursday, 24% of the crop was planted, up from 14% the previous week and 18% at the same time last year. Planting of Brazil's first corn crop is 51% complete, compared to 48% last year. CONAB is projecting Brazil's soybean crop to reach 177.6 million metric tons, a 3.6% increase over last season. Total corn production is pegged at 138.6, down 1.8% from last season.
This is the time of year where we will start to look at South American weather much more closely. Over the last 7 days, Brazil had mostly normal rainfall across its soybean areas, 96% of normal, based on info from our friends at Crop Profit. It was the week prior that they had well below normal precipitation. And then the next 7 days, they're going to be pretty dry, only 52% of normal precipitation expected across Brazilian soybean areas based on Euro model data. I can't help but wonder if this has maybe something to do with the strength in the soybean market. You're getting into that time frame where the market's going to start to pay attention to this. So the next 7 days drier than normal, but then you go to the 8 to 14 and it kind of returns to normal. I don't know. Of course, the further you go out with weather forecasts, the less reliable they become. But we know with maybe a little bit greater degree of certainty that the next 7 days are going to be kind of dry. So certainly something to pay attention to, and we will keep you guys updated.
President Trump is considering boosting imports of Argentine beef to lower domestic beef prices. On Sunday, Trump said the measure would also support Argentina's struggling economy, something that he has been focused on recently. Argentina currently ranks as the 9th largest supplier of beef to the U.S., accounting for only 2% of total U.S. beef imports. It remains unclear how much capacity exists to expand imports from Argentina. Even if the U.S. were to purchase all of Argentina's projected 2025 beef exports, estimated by the USDA at 770,000 metric tons, it would likely have little impact on beef prices. Another critical consideration is Argentina's history of foot and mouth disease. If brought to the U.S., the disease would be devastating for the nation's cattle industry.
I pulled the chart of ground beef prices. This is the BLS stuff that they include in the CPI numbers. So ground beef 100% at the retail level averaged $6.32 a pound, which is up 59% since the start of 2021. And I believe this is accurate as of August. Mackenzie, what are the chances that this headline helps to break the cattle market, which it kind of did, but does absolutely nothing to lower beef prices?
I think there's a high likelihood of that. Yesterday, like cattle prices, they bounced back marginally. They were mixed. I don't know how great a losses we'll see when and if Trump actually announces this plan. But like I said, this is not going to help beef prices. We can import all of their exports, their expected exports, and it's not going to, it maybe move the needle like marginally, but not enough to make a difference. I think it is Trump's, he just wants to continue to help Argentina in the back of my mind. Obviously, he's worried about beef prices too, but he's going to Argentina because, again, he's trying to help their economy.
Have you heard much from so we talked to the farm crowd, which has different opinions on a lot of this, because you got to remember 90%, 99% of the population would like to see lower beef prices. Is that who he's targeting here? Is he trying to say, hey, look, we're helping out with beef prices? Because I don't know that the general public is that concerned about it.
I don't think the general public is concerned about it whatsoever.
No.
I think it is a poor plan altogether, because he's basically crapping on all of us here in the Midwest, and we're the ones that put him in office largely, and he's lost a lot of support and a lot of backing from all these not great policies when you talk from farmers to ranchers, in my opinion.
Again, Trump ag advisors, raise your hand. Who are you? Where are they?
Exactly.
I think they exist. I just don't think they listen. On a separate note, I told you before we started, they delayed my Brooke Rollins interview again. It was supposed to be today, and it's going to be, I think, Wednesday next week. Maybe. I don't know. We'll see.
Yeah.
What did cattle do yesterday?
Cattle futures were mixed. Live cattle were $102 to $182 higher. Feeders were $180 lower to $1 higher. Box beef prices were higher. Choice was up $241 at $369.18, and Select was up $319 at $353.46.
The S&P's down 8 points. The Dow's down 50. Treasuries are mixed. U.S. dollar is up. Crude oil is up 53 cents at 58.05 in the November WTI. Have a great day, guys. We'll be back on Wednesday.